Owning versus renting. The advantages of owning a life insurance policy. Should we rent or buy a life insurance policy? Once the importance of life insurance is recognized and the search is started for a suitable policy, one of the first choices the prospective buyer commonly faces is whether to purchase term or whole life insurance. While the discussion between these two types of coverages is fairly clear, understanding how each serves two different budgeting mindsets may not be clear. The key difference between term life and whole life are term life lasts for a set number of years, while whole life lasts for our entire life, that is 100 years. Term life insurance. It is a temporary insurance policy like renting, hence it is cheaper but has an expiry date. It provides protection against financial loss resulting from death during a specified period of time or term. It is composed of mortality costs and contract expense and is characterized as providing pure protection because it pays only death benefits and does not contain any cash value features. Coverage stops at the end of the contract period. A useful analogy here is real estate. Term insurance is referred to as renting insurance. It is like someone renting an apartment. The tenant pays the rent month after month and receives shelter in exchange. There is no headache of maintenance or repair, no big down payment apart from the deposit paid, no complicated paperwork. But after the term of the lease expires and the landlord raises the rent, the tenant either moves out of the apartment or renews the lease. Just as when a tenant vacates the property, he or she is returned the deposit in return of premium term life insurance. The premium is returned. And there is no stress quotient. Easy in, easy out. This individual has nothing to show for the money they spend over the years, except the memories. Term life is an economical way to provide life insurance protection with no accumulated cash value for a limited period of time as you choose 10, 15, 20, or 30 years. The advantages of term life insurance are lower initial cost, pure death protection, and the disadvantages of term life insurance are absence of a savings element, expiration of the contract after a specified period, and we usually look at how cheap a plan is while ignoring inflation. With return of premium, we forget that the value of the premium returned falls with the corresponding rate of inflation. It will literally be of no value after 20 or 30 years. Who is renting a life insurance policy best for? People with temporary needs for a specified time, young couples who need a large coverage at a cheaper price, or for those with high household debts and not have enough savings. Term insurance is usually designed to meet short-term needs, not for lifelong goals. As quoted by Ben Feldman, term insurance is temporary, but your problem is permanent. Whole life insurance. If term insurance is like renting, then whole life insurance is like owning a home, hence it is expensive. Whole life is a form of insurance offering permanent protection at a level premium that is designed to provide lifetime coverage till 100 years. Whole life insurance offers guaranteed protection that will never expire as long as our payments remain current. Whole life adds a cash value component and can provide us with guaranteed protection for life, lifetime coverage till 100 years, tax deferred cash value growth and accumulation, and the ability to access our funds during our lifetime and leave a death benefit for our beneficiaries after we pass. Some might buy an apartment unit instead of renting it. This person's monthly payments will be higher than what the tenant had to pay each month, assuming they live in comparable apartments. However, with each month's payment, the buyer acquires more and more equity in the property. After keeping up with their payments, this individual owns the apartment. Perpetual uninterrupted compound interest, which employs triple compounding to earn compound interest in a tax deferred account because taxes destroy compound interest. This is considered a living benefit of life insurance because, in contrast to a plain death benefit that pays out when we pass away, we can use the money while we are still alive, while still having the built-in death benefit to last our lifetime. We can use it to apply for no physical collateral loans with much cheaper repayment plans. Whole life insurance can be customized to allow high flexibility. Whole life insurance is one of the most powerful assets. Who is whole life insurance best for? The money you spend on this insurance may be higher upfront than for term life insurance, but its value and coverage do not expire. It is ideal for those who wish to build a significant financial asset. But is term insurance necessary? Most definitely. As quoted by Franz Kafka, better to have and not need than to need and not have. It is usually designed to meet short-term needs, not for lifelong goals. What if we were to pass away sooner than expected with not so much in savings account, not much in provident funds or stocks and mutual funds? Then we can get a life insurance policy at a cheaper premium to meet immediate needs for the surviving members. Get the tenure and death benefit right. A term plan is meant to replace the income of the policyholder in case of death. So the insurance policy should cover him till he or she intends to work. Ideally, a person should take a cover till the age of 60 to 65 years or till one is employed, not longer than that. But pension age might increase due to longevity. Always account for inflation because for a 20-year-old to go for a 1 crore term plan and passing away at 85 years, 1 crore will be of not much use for his surviving spouse in her 80s with another 20 years to survive and a good few crores needed for that. The difference between term and whole life insurance can be boiled down to cost and tenure. As quoted by Lepi Williams, nothing good comes so cheap. If it does, it'll never last. Before I conclude, life insurance shoppers often struggle with a big choice at the start of their decision making process. Should I buy term life or whole life insurance? If you are worried about finances that have a finite length, such as a mortgage or future college costs, you can typically solve that with a term life insurance. But here too, we have to consider inflation. All these expenses today are going to go up with time and get more expensive. But if your need for life insurance stretches indefinitely, it's time to look at the lifelong coverage provided by permanent or whole life insurance policies. Whole life insurance is a form of permanent life insurance. It offers more financial flexibility with its cash value component. Whole life insurance certainly offers lifelong protection, ability to borrow from oneself without any physical collateral, and let our money grow with perpetual uninterrupted compound interest, which employs triple compounding, to earn compound interest in a tax deferred account because taxes destroy compound interest. Hence, in the long run, it is always safer and a better option to buy than to rent. May the force of assured coverage and benefits with life insurance be with you. Please go through the description for the sources for this presentation. I've shared the link to my next presentation. Will a rupees 1 crore term life insurance plan be enough to take care of all the needs of our family after 20, 25, 30 years? At the end of this presentation. And do not forget to check out the playlist for more presentations. If there is something to gain and nothing to lose by asking, by all means ask. Thank you for taking the time to watch this presentation. I sincerely appreciate it. Namaste.